Hey there, I'm Michelle Cooper, owner and founder of Alchemy Accounting and Bookkeeping Services. And today I'm going to answer a common question that we get asked here, which is what is the difference between cash and accrual accounting methods? And which one should I use? So, accrual accounting means that revenue and expenses are recognized and recorded when they occur. While cash basis accounting means that these same items aren't documented until exchanges hands. So that is the main difference between the two. So deciding between cash basis accounting and accrual basis accounting can be a difficult decision for the business owner when they're first starting their business. Each way of accounting offers different viewpoints into your company's financial well-being. Many companies can choose which method that they want to use depending on the needs of their business. However, the real difference between the two is the timing of when your company accounts for its expenses and revenue that is earned. So let's talk about what each offers your business. So let's start with cash basis. Cash basis accounting is based on your company's cash activity. It tracks when cash comes in and when it goes out. You can think of cash basis accounting similarly to your checkbook register. At the end of the month, you balance everything to see how much cash you have in the bank. Cash basis accounting is the simplest form of accounting, and it doesn't have to adhere to generally accepted accounting principles, which is kind of called GAAP as a short form. You can record revenue when you receive the actual cash from your customers, and your expenses are recorded when you actually pay vendors or suppliers or employees. Your business might not need someone with vast experience in accounting to be in charge of your books in a cash basis business. Um, but the really, really important thing to remember is that cash basis accounting will not give you complete insight on how your business is actually performing. So let's talk about accrual basis for your books. Accrual basis accounting applies the matching principle, matching revenue with expenses in the time period in which the revenue was earned and the expenses occurred. This gives us a better snapshot on the actual real profitability of the business. It's more complex than cash basis accounting, and so the skill set for the bookkeeper is higher, usually. But it provides a significantly better view of what's going on in your business, and in particular, into the profitability of any particular revenue stream or project. With accrual basis accounting, entries are made before you close out the financials for the month. And this way, the revenue is identified in the correct period, and accruals for any expenses which occurred during that period can be made. This way, you can put revenue into the correct period and accrue for any expenses occurred in that period that it might not have been paid. This method allows you a more accurate trend analysis of how your business is doing rather than fluctuations that occur with with cash basis accounting. If you are running a business like, say, a hair salon, and you want to record the amount of sales in a month, you'll want from the first to the last day of the month as your monthly sales. If now that entry happens in the accrual-based accounting methodology. If you are operating on a cash basis, you're not going to see that last uh, day of sales because you're recording cash as it comes into the bank, and most likely your your bank deposit is the next business day, which will be the first of the following month. So, does your business see cash basis or accrual accounting for your tax reporting? Well, choosing which type of accounting for your business depends on many factors, and you definitely need the advice of an accountant. Before filing with the IRS, um, Stating whether your company is cash or accrual, because that's one of the things you need to do is to tell them you should understand your strategic plans in order to make an informed decision. Cash basis is ideal for startups because the accounting is easier, it's simpler, and the management can focus their time on strategic planning and growth. However, startups or small businesses should ask themselves some basic questions before choosing between cash and accrual. Will the books be audited? Will you be selling the company in the near future? And do you need to obtain bank financing? Is there a possibility that this business will go public? If any of these questions are yes, accrual basis accounting might be the best choice or the better choice for your company. Investors and external parties need more complex reporting that shows how the business is performing. S- So, making a decision, right? Deciding between cash and accrual really depends on the business. We have clients who use cash and we have clients who use accrual. Um, and it really depends on your business and the complexity. So cash basis and accrual basis are only a piece of the picture, and it's really important to look at both to understand what is actually going on with your company. Accrual gives you a better view of profitability. As I said, you can see a trend analysis because you recognize revenue and expenditures in the period in which the revenue was earned and the expenses occurred. You can see a forecast of your monthly burn rate for operating expenses and get an idea of what you need your gross profit to be in order to cover these expenses. Cash basis accounting can show larger fluctuations because one month might be really profitable and the next is not because of the timing of receipts and money going in and out. This doesn't usually reflect the true profits on a job or a project. If you want to see how well your overall operations are, accrual basis accounting and reporting will give you a better view. So deciding between cash or accrual really depends on the state of your business, where you're at, and what's going on in your business. For reporting purposes, accrual basis will usually provide better financial intelligence on the true state of your business and the true profitability of your business. So I want to answer just a few questions here. Um, Many people ask me, should I use cash or accrual? Like, what's the short answer? It's generally agreed that the accrual method is preferable for most small businesses, particularly those selling goods rather than services. Businesses with little cash on hand may want to stick with the cash method so that they can see cash flow problems, like they can see them before they become a problem. Another common question is, can you use both cash and accrual accounting? So technically, you can report, so you can run reports in both cash and accrual. However, in the United States and in Canada, the tax code allows a business to calculate its income using the cash or the accrual basis. It cannot use both. So once you decide which methodology you're going to report your taxes in, that is where you have to stick. However, if you have software like QuickBooks Online, you can run reports in both. For financial reporting purposes, US accounting standards require businesses to operate under an accrual basis. That's your short answer. So I hope this was helpful. It's a common question. If you have more that you want to talk to us about in regards to this, we're happy to do that at any time. And I look forward to hearing from you. Just reach out, let us know you've got more questions. Talk to you soon.